Sole trader and wondering how to pay yourself? Well, watch on. As a business accountant, my team and I spend all day long helping business owners on their journey. And of course, we chat to a lot of our self-employed clients about the most important thing, how to pay yourself. So how do you pay yourself? Well, actually, it's pretty simple. In practical terms, you log into your online banking, you select your business account, and you transfer the money to your personal account. Now, I say business account, we'll talk about that in a minute if you're thinking, I haven't got one. And then in your records, you're going to mark that transfer down as what's known as owner's drawings. That's what we call it in the accountancy world. It's basically the technical term for it. You might call it something like your wages or some other form, but it's technically drawings. And I'll talk to you about the impact and the difference between drawings and wages a bit later on in the video. But practically, that's all you need to do. But I wanted to expand on a few key areas so you don't make some costly mistakes. Now, firstly, I say transfer from your business account. However, you might be thinking, well, I don't have one. And if that's you, I'd absolutely encourage you to go and get one. The reason for that is threefold. Number one, it's very likely that under the bank's terms and conditions, they actually prohibit you from running a business through a personal account. And that's most likely because they will charge you some banking fees in some areas in your business that they wouldn't on your personal account. So for example, it's very normal that you would pay bank fees when you pay in cash in your business account. Sounds odd if you've only ever had a personal account because that's not the case, but that's just the prime example, number one thing that happens quite frequently. And then secondly, from my point of view, as a business accountant, I want you to separate your business account because it's far easier and cleaner to keep your records. We spoke a lot in other videos about how important it is to keep good records in order to save the most tax. But I think particularly in a world where you're either using accounting software or when new rules come in April 2026 for most sole traders, where you're almost going to be forced to use some sort of digital record keeping to submit quarterly tax returns, and we're doing other videos on that, you're going to want to be able to do your bookkeeping and your record keeping really, really quick. You don't want to be spending any more time than you absolutely have to. And if you'd imagine, if you haven't split the transactions out and you've got your personal account there with all your McDonald's and your cinema and whatever else you've been, your Starbucks that got nothing to do with business, you're going to have to go and at least look at every one of those transactions and tell the system that it's got nothing to do with your business, and it's going to add time to your bookkeeping. So keeping a nice clean business account with just business expenditure in there is absolutely best practice. It is really going to be key to speeding that record keeping up. And then thirdly, if you're very unlucky and you do have a HM review and customs investigation, it's very easy to just turn around your piece of software, hopefully, or your business account and say, well, there you go, have a look. You know, it's just less to dig into. It's much easier to understand. And in our experience, it makes that process go a lot quicker. So if you don't have a business account, go and get one set up. Yes, you might incur some small fees, but generally they're going to be tax deductible. So it's not a big issue. And it's far better to have that cleaner separation. Now, I think one of the key things also to understand here is that, of course, all of that money in the business account is yours. As a sole trader or self-employed person, all the money that you earn is yours. No one else is in play. There's no limited companies, anything like that. So if you want to take all the money out of the account, you crack on. However, you do have a potential tax and national insurance liability to consider as you go, and that's going to be payable most often a lot further down the line. So bear that in mind if you're thinking of just draining all the cash from the bank. It's probably not going to be the best plan. And I've actually done another video talking about a 25% rule, and I say rule, it's more like a guidance, a guideline to help you with planning that tax bill. So check that video out. Obviously, on top of this, you're going to want to keep enough working capital, as it's known in the business account, to keep your business going, i.e. you've got enough money in the account to buy fuel for the week, to pay for materials up front, to pay for your software licenses before you get paid from potentially your client or your customer, that kind of thing. So be sure to remember, yes, tax, and also money to actually run the show. So if you've got all that ready, you'll be in a good place. So just be very careful about just draining it all. Now, for the final very costly mistake that I see with a lot of sole traders, we see at least a few cases a year where this has happened, is that inside of your personal tax return, there's a box for something known as wages paid. And we quite often see that people will put these drawings in the wages paid box. Now, that wages paid box is for when you've paid wages to other people. And what it actually does if you put a figure in there is it reduces your profits and actually reduces your tax bill. And that's not right, because your drawings are you taking the profits. It's a bit of a complex one to kind of understand on the video, but if you put it in that box, you're going to end up reducing your tax bill incorrectly. And what tends to happen is nearly always the revenue figure this out a little while after you've submitted it, and they write to you, open an investigation, and then they charge you interest and penalties for the tax that they should have received. So if you take nothing else from this, just think, do not put what you are drawing from the business in that wages box, and you avoid yourself the hassle and the cost. And that's how you pay yourself. So make sure to check out our other video on the 25% rule, because that's going to help you plan for that tax bill so you don't get caught out. I'll see you on the next one.